Dear students, good morning. This is D.Prabakaran, Assistant Professor from Department of Commerce, St.Joseph's College of Arts and Science, Cuddalore. In this video, I'm going to teach about Introduction to Final Account. Final Account is one of the very important chapter. It is very useful that every student of Commerce, Management, BBM, BCA, MCA, even Max, they should know how to prepare final account. In this video, we are going to see what is mean by final account and what is the purpose for preparation of final account. First of all, the final account is nothing but the final account is always prepared at the end of the year. In general, if we take any businessman or the trader, irrespective of their investment, irrespective of their size, irrespective of the business nature, at the end of the year, they want to know their business operational result. For which, here we are preparing the final account. That is the first purpose. In order to know our business operational result. Then second one, the final account which reveals our financial position, our financial status. That is the purpose for preparing the final account. This account is always prepared at the end of the year. For an example, we are starting the account from journal entry, then ledger, then trial balance, and it will be end with the preparation of the final account. Now we are going to see the pro forma of the final account. How to prepare the final account. The preparation of final account is very simple. The final account, which consists of three parts, there are three stages. There are three steps in preparation of final account, namely preparation of trading account, preparation of profit and loss account, and preparation of balance sheet. Here the trading account is nothing but which account? An account which relate to buying and selling, an account which relate to the manufacturing level transaction, the manufacturing level transaction which are recorded in trading account. Then second stage, the preparation of profit and loss account. The profit and loss account is nothing but this account with concerned with relate the transaction of the office related transaction. In that account, we are going to record the income and expenses, profit and loss. Then third one, the third stage is preparation of balance sheet. Here the balance sheet is not a state, it is not an account, it is a statement. This statement is prepared in order to know the financial status or the financial position of the business concerned. We are going to see the pro forma of the final account. How to prepare? What is the pro forma? Here, the trading account and profit and loss account, these two accounts are going to prepare together in a single account. The first one we are going to see the trading account pro forma. Here, in debit side particulars, amount inner column, amount outer column. Similarly, in credit side particulars, amount inner column, amount outer column. In debit side, first of all, I'm going to record to opening stock. The next one, to purchase. Here purchase means the purchase of goods. Here it does not mean the purchase of asset. If there is a purchase of asset, it has to be recorded in balance sheet. Here I'm going to record only the purchase of goods. If there is any purchase written, it should be deducted from the purchase amount. Then in credit side, I'm going to record by sales minus if there is any return, it has to be deducted from the sale amount. Opening stock recorded in debit side and the closing stock recorded in the credit side of the trading account. Apart from these four items, I'm going to record direct expenses. The direct expenses are nothing but these expenses which are related to the manufacturing level. For example, wages, factory lighting, carriage inwards, carriage on purchase, oil, coal, water, gas, power, royalty, import duty, clearing charges, manufacturing expenses, productive expenses, and all other factory related expenses which are recorded in the trading account. At the end of this account, we are going to get either profit or either loss. If you are going to get profit, it has to be recorded cross profit. If you are going to get loss, you are going to record as cross loss. If the debit side of the trading account is greater than the credit side, that is a loss. If the credit side of the trading account is greater than the debit side, there will be a profit. The next stage is preparation of profit and loss account. The profit and loss account is a continuation of the trading account. In profit and loss account, there are two sides. In debit side, I'm going to record all the expenses and losses. Credit side, I'm going to record all the incomes and gains. First of all, I'm going to record the cross profit or cross loss which has been ascertained in the trading account. If there is a cross profit, it's going to record in credit side. If there is a cross loss, it is going to record it in the debit side. Apart from that, in debit side, I'm going to record all the expenses which are related to the office and administration, which are related to the selling and distribution. So these all the expenses which are recorded in the debit side. Similarly, in credit side, I'm going to record the incomes like commission received, rent received, interest received, discount received, dividend. So these all of the incomes are recorded in the credit side. At the end of this account, I'm going to close. When I closing this account, I may get either profit or either loss. If the income side is greater than or more than the debit side, which is the income is greater than the expenses, there will be a profit. If the expenses are greater than the income, that will be a loss. If there is a profit, it has to be recorded as net profit. If there is loss, it has to be recorded as net loss. Then third stage in the final account is balance sheet. Here the balance sheet is not a account, it is a statement. There are two sides, one is liabilities, another one is a asset side. Okay, here the liability side, it starts with capital, the capital amount. Capital add net profit. If you are getting profit on the P&L account, it will be added. If you are getting loss on the P&L account, that has to be deducted from the capital amount. Then the liabilities, long-term liabilities, current liabilities, it has to be recorded in the liability side. If we take in the asset side, we are going to record fixed assets, current assets, intangible assets. Those assets which are purchased for a long-term use is called as fixed asset, like land and building, loose tools, furniture, vehicles, patents. These all are the fixed assets. If we take the current assets, these assets can be easily converted into cash. One example, closing stock, debtor, cash in hand, cash at bank, prepaid expenses. These all are come under the current asset. When I closing the balance sheet, both liability and asset, it should be equal. So this is the pro forma of the final account. My dear student, I hope this video that will enlighten you regarding the preparation of final account. Thank you.